Hi. This is a sleuthing exercise. How to buy stocks cheaply. One obvious answer is look for disasters that may have gone to irrational extremes. For example, a few weeks ago, oil fell to a negative price because temporarily there was so much of it that foolish speculators who had bought futures found that they had to take delivery of crude oil and all storage capacity was taken, so they had no place to put it. So for a fabulously mad week, oil price plunged to a negative $40 a barrel. Negative. As panicked speculators paid others to take contract off their hands. This was as good as a bell being rung in the heavens, announcing that the bottom of oil price is here. As I noted in the previous clip, I went and bought half a dozen stocks of Canadian oil companies whose oil is stored in the ground, so they have no storage problem. And also, they're in Canada, where the law regime is much more secure than in the US. More about this last part soon, when I go deeper into today's stock example. What did Canadian oil stocks do since then? They are all up smartly. Two have almost doubled, and one, Shawcor, tripled. Are insiders selling? Oddly enough, no, they are still buying. Apparently, negative oil price must really have rung a bell. Well, there are other bells like this in the market if you only keep your ears peeled and wait for unjustified, panicked disasters. But the question is, where are the disasters today? Obviously, in the 3 R's: retail, restaurants, and real estates. I will leave retail and restaurants for a future clip, but for now, let's discuss the yummy disaster worth sleuthing today: real estate. And true to my promise of not giving tips, what I'll do here is give you the general principle and a stock name, but only as an example. I won't do your work for you. I'll just tell you how to go about sleuthing the stock, then give you a few homework tasks to see if it is really attractive. Because maybe it's not, or maybe not at today's price. It's for you to find out. But before I give you the name, first, why is real estate such a disaster today, or at least real estate stocks? Obviously, when citizens are forbidden to go out and earn money, let alone spend it, the economy tanks. Then even some honest citizens cannot pay their rent, and even some honest corporations cannot pay it. So stocks of companies own real estate that depend on rent tank also. The sidebar. These stocks are often in the form of income trusts. That is, they pay out most of the earnings in dividends to minimize their own taxes, which means they are usually bought by income-oriented accounts. Those income trusts dedicated to real estate are called REITs, real estate investment trusts. Most pay good dividends for good yields, but these are now even higher following the stock's decline. Only now, after several tenants have not paid the rent, the dividends on the REITs are seen as doubtful, which is part of the reasons the stock tanked. In sum, the question is, how long will this economic downturn last? And when it does end, will the tenants pay back what they owe? Of course, it depends on the tenants occupying the properties, but it also depends on one more thing, the legal regime, which brings me to Canada and its legal environment. Canada, like most of the civilized world, and unlike the US, has a legal system based on what is commonly called English rule, or loser pays. This means that if you sue someone and lose, you very often get hit with court expenses for the other side too. This aims to prevent frivolous lawsuits, and it's where most of the civilized world structures commercial law. Not so the US. In the US, anyone can sue anyone for free. Of course, paying lawyer's fee. Just by pleading paper, that's the name of a numbered line paper, you write your lawsuit on and get calendared on the court, and off you go. This is why there are so many lawsuits in the US, and why in many of them, the plaintiff is simply paid to go away. It's akin to any homeless person being able to drag you to a police station and accuse you frivolously. When the police realize it's nonsense, they'd of course let you go, but there won't be any penalty for the false accusation or compensation for your aggravation. This makes it far easier in the US to go to court, even when you know you are wrong, because if your time isn't worth much to you, the cost to you is next to nothing. Therefore, it is easier to welch on your debt in the US than in Canada. On the other side, if you did welch, it is easier for Canada to make you cough up what you owe in rent. which brings me to today's name. It is the Canadian REIT. Its name is Cominar, symbol CUF.UN. Cominar is the largest commercial property owner in the province of Quebec. Its portfolio contains more than 300 high-quality office, retail, and industrial properties in Montreal, Quebec City, and Ottawa, Canada's capital, all three big cities. During COVID, some tenants stopped paying rents, and like US REITs, Cominar stock dropped too. The low was 7. It now trades at 8 and change Canadian, compared to its peak of 15. It still pays a dividend of 8.6%. What is it really worth? As I said, for this you have to do some homework. I won't do it for you, but I'll give you the plan of how to do it, as simple as painting by numbers. In real estate value analysis, the principle often is very simple. First, see what's the market capitalization of the stock and what's the debt. Sum them up and you'll get the enterprise value. That's what you'll pay to get the properties clean of debt, like buying a house with no mortgage. The market cap and the debt info are available on Yahoo Finance. Look it up. Then see how many square feet Cominar owns. It's there too. Divide the first by the second, and you'll see how much you are paying now per square foot in Cominar on the average at the current price in the market. Is it expensive? Is it cheap? How to find out? Here is where the second part of the homework comes in. Pick up the phone and call real estate agents in Canada, preferably in Quebec. Or if you're in the US, ask your local real estate agent to help you find this out. That's the sleuthing part. What you are after is the range of price per square foot now prevalent in the Quebec market. For example, condos in Canada's big cities go for between $800 and $1,500 Canadian bucks per square foot. Although there are some that go for less and fancy ones go for more. The same for office space, although of course these come at different prices. What's the composition of Cominar's real estate portfolio? You have to know that. So that's the third part of the sleuthing exercise. Pick up Cominar's annual report and look it up. You can find it on cedar.ca, SEDAR.ca. That's the Canadian equivalent of the Edgar system in the US that gives you corporate information. My guess is it'll take you about a day to do all this, maybe 2 if you take some time off to do other things. But once you do this, you'll see whether the price you are paying now per square foot in the market via Cominar stock for a big piece of Quebec real estate, you will see if it's high or low. Then you can decide if the stock provides value. Simple. Or you can do it backwards and compute at which price the stock would be cheap based on the current value of its real estate. Because maybe it still isn't cheap. How to find out? Do the work. Yes, it will take some time and effort, but if you do it, your advantage would be great. Because if the stock then goes down on a downdraft, you'll be so secure in your knowledge that you'll just buy more, buying it from the lazy souls who never bothered to do the work in the first place. Now, what are the risks? Of course, there are risks. First, that more tenants will stop paying rent. Always possible. Second, that the entire market will drop on a new corona blip. Third, that the Fed chairman will get out of bed on the wrong side or eat too much spicy pepperoni and raise rates. Or fourth, maybe a meteor may strike. The last 3 risks are unavoidable, and you can't worry about them. But as for the first, of tenants not paying further rent, remember that first, the Canadian government is a renter in many of Cominar's buildings, so it's not very likely it would stop paying rent. Can always raise taxes if it's hard up. And second, Quebec is in Canada after all, but because of English rule, tenants think twice before welching on the rent. Since if it comes to trial, not only will they pay back rent, but they may even have to pay court costs too. So, is Cominar stock attractive? Again, I won't tell you. I said several times, I don't make recommendations. I only make theoretical speculations in order to teach you how to sleuth. Using stocks as an example. This time, the teaching comes with some homework. I even gave you a plan for doing this homework, just to make it easier for you. And by the way, just to give you the incentive to do the homework, the Canadian government just reported there's a gradual resumption of economic activities in the province of Quebec. That's it for this clip. Next time, we'll go into the more difficult art of selling stocks. It's one where very few excel. So if you know it even partly, It can give you great advantage over the many geniuses out there who only learn how to buy but never learn how to sell. Let me know in a comment below what you think of all this, and if you like it, give it a like, subscribe to the channel, and tell all your friends to subscribe too. I'll see you next time, and meantime, thank you very much for watching.